$120. It took me 5 years to get the $120 to buy a stock, 3 shares of City Service Preferred when I was 11. My dad originally was in the investment business. He really wasn't very interested in it, but I would go down on Saturday morning and he had these books there in the office, and I read all those, and then I went to the Omaha Public Library, and I read every book on investments in the Omaha Public Library by the time we moved to Washington. And then when we got here, I had the Library of Congress.
Did you get through all those?
Oh, I read everything, and I just found it fascinating, and incidentally, I find it fascinating today. I mean, it's an activity. You know, if you're a baseball player or something, your legs may go or something. Well, my legs have long gone, but it doesn't make any difference in what I do. So, I literally have as much. I always have had fun working, but I have as much fun now as I've ever had in my life. I mean, work with people I love, doing what I love, and it just doesn't get any better than that. Round of applause at the start, but I've learned that crowds now applaud at the start because I'm 83 and they're not sure I'll be around at the end of the talk.
I've shared enough dinners with you know that you have more energy than anybody I know. So let's switch to a little bit on the philanthropy side. So
Sure.
President DeGioia talked about the giving pledge. How did you come up with the idea with Bill, and how are you doing on it? I mean,
Well, we're doing great. And it was, I don't know, 3 or 4 years ago, Bill and Melinda and I were out in California and talking, and I'm not exactly sure how it came up, but we decided to write David Rockefeller and ask if he would host a dinner in New York for about 16 or 18 people, just to talk about philanthropy. And Oprah Winfrey came, and Mayor Bloomberg was there, and it was a private dinner. And I started having these people talk around the table as to how they developed their philosophy of philanthropy. It must have taken us 2.5 hours or so to get around. I mean, people were really interested in it. So Bill and I were at that dinner. We decided that maybe there would be a possibility of taking this passion which these people had shown and going to other people that had a great deal of money and see if we could develop something where people would pledge at least half their net worth. And we now have about 115 people. I've been dialing for dollars. I call these billionaires up, and sometimes I tell them I'm going to write a book on how to live on $500 million because apparently there's this great need. They just can't seem to figure out how to do it, and they need help. But it's been very rewarding, and I received a letter from one woman. She and her husband had over $10 billion, and she sent me a tie. She sent me 2 ties, and she sent me this handwritten note and said that they hadn't really faced it. It's a little like facing your own mortality to some extent, making that plan, and that's tough for people sometimes. And so she and her husband had changed things, and over half of that $10 billion was going to go to philanthropy. They do tend to postpone the decision. So I tell these people I call, the last will is what counts. But I tell them, if I'm talking to some 70-year-old, I say, do you really think your decision-making ability is going to be better when you're 95 with some blonde on your lap or now? So let's get on board, fellas. Nobody in our group has given away $1 that in any way affects how they live. I mean, I have the much greater admiration, frankly, for the person who drops $5 or $1 in a collection plate on Sunday, where it makes a difference in whether they go take their kids to a movie or whether they go to eat out or something of the sort. They are actually giving up something that has utility to them. I am giving up nothing that has utility to me. I have everything in the world I want that can be bought by money. So I have a whole bunch of stock certificates. They have no utility to me, and they can possibly have enormous utility to other people in vaccines or education or all kinds of things. So the people that give up something that actually can have utility to their family and give that to some other person so it has utility to them, those are the people I really think deserve the kudos. But it's still nice to go where the money is. I mean, it's the Willie Sutton approach. So if we can work on polio or something like that, and it takes big contributions, then we want to go after it.
So, these are young people. What should they take away?
The lessons are that people will continue to make the same mistakes they've made. I mean, humans, and it doesn't correlate to IQ particularly. When they get greedy, and we had this huge bubble in the most important asset the American public has housing. I mean, so you had a huge bubble in something you could borrow heavily against. So you could run a margin account effect on a house instead of stocks, and the conditions got very lax. And so when that bubble popped, but people came into that gradually. When they get fearful, it happens all at once. I mean, when people get scared, they all want to leave at one time. And we had them all want to leave at one time, and that'll happen again. It'll happen with a different set of circumstances, but the human animal will keep behaving pretty much the way it has in the past. So we will have periodic recessions. We'll have an occasional panic, which doesn't all recessions don't come from panics, but the good news is, when we became a country, China had 300 million people at that time. Europe had about 75 million. They were just as smart as we were. They worked just as hard as we did. They had natural resources that were similar to ours. And yet we ended up with a quarter of the world's GDP, a few hundred years later. We've got something that works, and we don't want to mess that up. We want to figure out what we do with this abundance better as we go along. But you don't have to worry about the system working. But you will have periodic recessions, and you will have an occasional panic brought on by something that who knows where it comes from. The thing to remember at that time, I wrote an op-ed piece in the New York Times in the fall of 2008, and I said, the country will come back. It'll go through a big recession and everything, but it'll come back, and it's coming back. So don't ever worry about America. It'll say, you're in the right place. By a fellow named Ben Graham called The Intelligent Investor. I don't remember what I paid. But aside from what I paid for my 2 marriage licenses, that was the best investment I ever made. It's very important to have the right framework. You need to have an approach to investing that's sound. And Graham's approach is simple, but some people adopt to it, and which I did immediately, and most people don't. But if you have the right philosophy, you will find opportunities as you go through the next 20, 30, 40, 50 years. And frankly, you're most likely to find them in periods like 5 years ago when we were having the panic. I mean, stocks sell at silly prices from time to time. Most stocks at one time or another sell at very silly prices. It doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act. I tell people, if they're going in the investment business, if you got 160 IQ, sell 30 points to somebody else because you won't need it. I figured out very early, you don't have to be that smart in this business, which is fortunate, but to be able to ignore what other people are saying and simply look at the facts and decide, is this stock which is selling at X worth 2X? And occasionally you'll find things like that. And when you don't find them, you don't do anything. So that's my generalized stock tip. Where it comes from, who knows? But when that time comes, the question will be, are the people who have panicked, who have frozen, who have caused the economic engine to stop, will they believe and come right back and be doing something? And I'm not sure whether what's been enacted is a plus or a minus in that regard. Regardless, the country will come through. But it's very hard to write regulations that will keep people from acting foolishly, particularly when acting foolishly has been proven very profitable over the preceding few years. It's just the way it works. Humans, they all think they're Cinderella at the ball, and they think, as the night goes along, the music gets better and the drinks flow and everything, and they all think they're going to leave at 2 minutes to 12. And of course, there's no clocks on the wall, and they're still dancing. So it'll happen again. But buy when it happens.
Next question.
I'll be buying. To an agrarian society like we had a couple hundred years ago, with most people working on a farm, most people fit most job requirements. I mean, it was that as the world has become more and more specialized, I think we keep moving away from that. So a market system will not pay well for a significant percentage of society. They aren't needed. to keep GDP itself going up and people at the top. And I think government has to address that. I think it's, I sometimes toss out to students this proposition. Imagine that it's 24 hours before you're born, and you're sitting there, Johnny or Joni, we don't know yet, and you're in the womb, and the genie comes, and the genie says, John or Joni, you strike me as a remarkable potential human being, and I'm going to give you an enormous responsibility. I'm going to let you decide the world, how the world is going to work into which you're going to emerge. You can decide on the economic system, the social system, the political system. You design it. And whatever you design, that's going to be the system that grandchildren live. And you, being wise beyond your minus 24 hours of age, say, I know all about you, genies. What's the catch? And the genie says there's one catch. Just before you emerge, having designed the system, put it in cement, you're going to go over to that barrel over there that has 7 billion slips in it, one for every human being in the world, and you're going to pull out a slip. It may say male, it may say female, it may say white, it may say black, it may say infirm, it may say strong, it may say bright, it may say below average, it may say United States, it may say Bangladesh. Now, not knowing which ticket you're going to pull out, what kind of a world do you want to design? Well, you certainly want to design a world. How do you treat the people that are left behind in a system that maximizes the output of goods and services? And that can only come through government. The most important thing is to be able to define which ones you can come to an intelligent decision on and which ones are beyond your capacity to evaluate. You don't have to be right about thousands and thousands and thousands of companies. You only have to be right about a couple. I met Bill Gates on July 5th, 1991. We were out in Seattle, and Bill said, you've got to have a computer. And I said, why? And he said, well, you can do your income tax on it. I said, I don't have any income. Berkshire doesn't pay a dividend. He said, well, you can keep track of your portfolio. And I said, I only have one stock. I said, and he says, it's going to change everything. And I said, well, will it change whether people chew gum? And he said, well, probably not. And I said, well, will it change what kind of gum they chew? And I said, well, then I'll stick to chewing gum and you stick to computers, you know. I don't have to understand, but there's thousands of opportunities there. I did understand the Bank of America, you know, and I'll be able. I'm able to do that. I'm able to understand some given percentage. But Ted Williams wrote a book called The Science of Hitting, and in The Science of Hitting, he's got a diagram, shows him at the plate, and he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and, you know, you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. You know, 4 or 5 will probably do it over time.